Good morning, everyone. Trust we are doing good. Yeah, so welcome to the webinar, which is Technical Analysis Explained. Is just a general continuation of our previous webinar that we've held, more about technical analysis, more deeper insights into technical analysis. So, generally, what we'll start with is technical analysis. So that's what we're talking about for the next coming few lectures or weeks, if I would say. But first off, before we begin, let me share this with you. Um, in the financial space, everybody thinks of making profits, but you need to understand that you need to take a certain amount of risk or a certain level of risk to be able to make profit. So, in a nutshell, it's all about taking reasonable risks to make profits in the financial market. So, let's get to feel one another. If this is the first time attending the webinar or attending any of my webinars, do drop something in the chat box. Thank you. And also, if you've been on my webinar continuously, you've been learning a lot of things, do well to drop something in the chat box. And lastly, if you can hear me loud and clear, drop something in the chat box. Thank you before we begin. I'm waiting response in the chat box. Thank you. Okay, thank you very much. Thank you. So I just sent in a poll, which is, are you excited about today's webinar topics? Let me know in the poll section. Thank you. Just respond to the poll. Thank you. Okay, so yeah, that's great. Now, before I begin, let's quickly make reference back to the last session that we had. Okay, reference to the last session that we had. What did you learn so far in the previous session? Because I remember the previous session we talked about that was the majorly talking about technical analysis and fundamental analysis. So let me know, what did you learn about technical analysis and fundamental analysis the last session we had? Okay, let me know what you learned. Let's start from there so I can see if there's a way I could restructure your thoughts towards what you learned or refine it properly. So I'll just wait a few minutes for us to give our responses. And if there is no response, we just dive right into the class. Okay. So trying to share my screen right now, So, technical analysis explained. Like, we're going in depth into technical analysis today. So, what we'll be learning in this session is the difference between technical analysis and fundamental analysis, then technical analysis component or concepts, which is market structure, like majorly market structure. Now, I remember sharing this with somebody this morning, and the person said, we talked about technical analysis last week, we talked about fundamental analysis last week, but I would love you guys to actually attest to this, which is when we talked about technical analysis and fundamental analysis, we only talked about them. We didn't actually state the difference between them, and also it was just brief. It wasn't really detailed. Is that right? We didn't talk about technical analysis and fundamental analysis in detail last time. We just like briefed through them to understand what they mean and their concept. That's great. Ugo says he learned about support and resistance from the last session. And have you been able to apply it? Have you started applying it on the charts for better understanding, to know how they work, that kind of stuff? Have you applied it? Let me know in the chat box. So the difference between technical analysis and fundamental analysis. Now, as you would see, there's no other slide there. So I would need everybody to concentrate or focus fully what I'll be saying, and also get a pen and paper to take notes, okay? Because taking notes is very, very crucial. Taking notes are very, very crucial in this space when we're talking about the financial markets. Taking notes is very, very crucial. So please do take notes. Please do take notes. Now, First thing first, we said the last time that technical analysis is when we traders take out time to study price itself. Okay, we're studying price. Like everything we'll be doing is based on price. That was what I said the last time. And when we talk about fundamental analysis, we said fundamental analysis is when we try, or we actually use economic data, that's political economic data or economic data of a country, to deduce where price will be heading to, right? So reframing that properly would say technical analysis is using price to determine where price might be heading to, using previous historical data on the charts to determine where price will be heading to. And while fundamental analysis is using economic data reports or political data reports going on around the world to determine or derive value and determine where price might be heading to next. Do we all understand that? Did we grasp that? If we do, please drop something in the chat box so I can proceed. And if you've got questions, use the question section so I can actually be able to attend to your question. So I'm expecting responses in the chat box. Do we all understand the differences between technical analysis and fundamental analysis? Technical analysis, you're using price to determine where price will be heading to. Previous price data, you're using it to determine where price will be heading to. While fundamental analysis, you're using data reports, economical data reports, to determine where price will be heading to. I hope that is very, very clear. Okay, now let's break down technical analysis in a more simpler form. Okay, now if you were to walk up a stairs, okay, if there's a staircase and you need to walk up a stairs, fine, you've been walking on that stairs for a long period of time, right? Like, let's say you've been living in that environment for 5 years. You know that, okay, you need to take 12 footsteps to be able to reach the highest point on the staircase, right? Now, without nobody telling you that, you've been doing it before, previously. You already know in your mind that, okay, just 12 footsteps and I'm up the staircase. That is what technical analysis is all about. Previous data, previous price data, previous footprints or previous steps you've taken has made you know the number of steps you need to take to get to the highest point on the staircase. Do we all understand that? Do we all understand that? If we do, let's drop something in the chat box. A yes, a no, an emoji or something. Let's drop it in the chat box. Okay? So that is what, or that is how we relate real life example to technical analysis. Now, when we're talking about fundamental analysis, is when let's say my mom tells me that, okay, from here to I don't really, okay, from here to London is 2 hours. Okay, let's just take it's a hypothetical example. Okay, it's an hypothetical example. So fundamental analysis is when my mom tells me that from here to London is 2 hours. So I just have to believe it. Why? Because it's a data from her. I don't know if she has been there before. I don't know if she has tried checking out the hour it gets to from Lagos to London, but it's just a data she gives me, and what I want to use it to derive value and know that, okay, if she said she spent 2 hours, possibly I'll be able to spend 2 hours 10 minutes, possibly I'll be able to spend 2 hours 15 minutes, that kind of thing. Do you understand that? Do you understand, using real life example, the concept of fundamental analysis? Now, the major difference between technical analysis and fundamental analysis is the fact that you use previous price data to understand where price will be heading to. You use previous footstep that you've taken to understand the number of footsteps that will take you to a certain destination. While fundamental analysis is just what the report that is given to you, just the report given to you. That is what you use to determine where price will be heading to. So I believe we are all clear on that. Okay, I believe we are all clear on that, and we'll be talking about technical analysis, the concepts of technical analysis. Now, I'll be going to a chart. Let me just stop sharing my screen for a moment. Let me just stop sharing my screen for a moment. Okay, I'm trying to actually Okay, the minute you just see my screen in a few moments. Should be the trick. Okay, so sharing my screen right now so we can all see it clearly. Trying to put things on my screen. Okay. Okay, so I'm sharing my screen right now. If you can see my screen, please do let me know. If you can see my screen, please do let me know. Can you see my screen? Yes or no? Can you see my screen? Okay, brilliant. So it has AUD USD 4 hour written on it. Okay, so this is just for explanation. We'll go on the CloudTrade platform to see how we can apply it. We'll go on the CloudTrade platform to see how we can apply it now. Okay, so yeah, now when we talk about technical analysis, it is everything we do on the chart, like everything we do with price on the chart. Now, these are a few components. If I quickly switch to the slide, you will see that I said market structure, trend analysis, support and resistance. Now, market structure is what consists of trend analysis and support and resistance. So I'll be explaining trend analysis, support and resistance, then relating the two of them back to market structure. Okay, so let's go right into it. Now, I said previously, briefly, that the market moves in three ways. It's either the market is going to the upside, which is an uptrend, right? Or the market is moving to the downside, which is a downtrend. Then I said, lastly, if the market is not doing any of this, we can see the market trade in a range. Okay, we said we can see the market trade in a range. That's within 2 points, which could be year to year, year to year, year to year, yeah, back to this point, back to this point, back to this point. Right? Are we correct on that? Okay, good. So we said the market is either moving to the upside or to the downside or trading in a range. And when price is moving to the upside, we call it price is in an uptrend. You say it's in an uptrend, an uptrend. Okay, we say price is in an uptrend. Price is in an uptrend, and when price is moving in a downtrend, to the downside, we say price is in a downtrend. Okay, then when price is moving sideways or in a range, we say price, we have a ranging condition in price. Okay, we say we have a ranging condition in price. Is that well understood? Is that clear? If that is clear, let me know before I proceed. Okay, brilliant, brilliant. Now, when we are moving in an uptrend, there are components of an uptrend. Okay, there are components of an uptrend. We have, okay, let me pick up this tool. We have, firstly, the higher highs, okay, highs, then we have the higher lows, okay. We have the higher highs and the higher lows when we are moving in an uptrend. Okay, we have the higher highs and the higher lows when we are moving in an uptrend. I'll just mark out a few more, then I'll explain it further. Okay, higher high. Sorry about that. Okay, higher high and higher low. Okay, so in an uptrend we have higher highs and higher lows. Now in a downtrend, what do we have? We have lower lows, lows, and lower highs. Okay, we have lower lows. Oh, sorry about that. We have lower lows and lower highs. Okay, we have lower lows and lower highs. Do we all understand that in an uptrend we have higher highs and higher lows? Then in a downtrend we have lower highs and lower lows. Do we all understand? We all understand that we have higher highs and higher lows on an uptrend, then we have lower highs and lower lows in a downtrend. Okay, so let me mark out a few more again. Then lows. Okay, lower lows. Mistake. I made a mistake here. Lower highs. I was supposed to write. Morning, troops. Morning. It's amazing to have you on the call. Okay, so we have lower highs. Okay, so now in an uptrend I said we have higher highs and higher lows. In a downtrend I said we have lower highs and lower lows. Now, how did we come about the concept of higher highs and higher lows and the concept of lower highs and lower lows? Remember, price is moving to the upside. Then look at this. This is a high, right? And this is a low. Look at this new high formed here. Is the new high higher than the previous high? Or is the new high, let me put it this way, is the new high, this one right here, let me pick up a brush tool to, is the new high, this is the new high, is it higher than this new high? Yes or no? Let's do well to respond on time, okay? Brilliant. That is why we call, or that is how we come about the word higher high, okay? Because of it is higher than the previous high. Then look at this. This is a higher low. Sorry, this is a low. Let's say it's a low. Then this is another low. Is this new low higher than the previous low? Yes or no? Is the previous low or the new low higher than the previous low? Yes or no? Let's do well to respond on time. Okay, let's do well to respond on time. Brilliant. That is how we come about the concept of higher lows. Because of price is moving to the upside, everything will create higher than the previous ones that have created. Okay, that is how we come about the concept of higher highs and higher lows. Now, if we look at the downtrend, this is a high right here, and this is a new high right here. Is this new high lower than this old high? Yes or no? Yes or no? Is this new high lower than this previous high? Brilliant. That is how we come about lower high, because the high is lower than the previous high created. Are we all following? Are we all following? Because I want everybody to understand this concept. That is why I am explaining it using baby terms. Okay, let's say using baby terms. I'm explaining like everybody's five, so everybody can understand the concept behind it. Okay, so look at this. This is a low, a previous low. Then look at this new low. Is this new low lower than the previous low? Yes or no? Brilliant. That is how we come about the concept of lower low, because this is low actually, then this low is lower than the previous low. That is how we come about the concept of lower lows. Okay, now let's take a look at the ranging condition or the ranging movements in price. So in the ranging condition, we just have highs and lows. Okay, we just have highs and lows. Okay, we just have highs and lows. Now, how did we come about having highs and low in the ranging condition? You will agree with me that every single time price was just creating a high at a equal position, right? Every single time price was creating a high at the equal position, right? Price was creating a high, it never broke above the high, it never broke below the low. So that is how we came about highs in the when it comes to a ranging market, and lows is the same thing, just vice versa. Price never broke below the low, it still came back to a previous point where the low was formed, and that's how we come about the concept of what highs and lows when it comes to a ranging market. Do we all understand? Taking everybody along so nobody feels lagged or lagging behind, or nobody's lagging behind. Do we all understand? Brilliant. Now, if I showed you all of this on the chart, it still wouldn't make sense when you can't, like if I show you all of this diagrammatically, it still won't make any sense at all if you don't understand it. So let's go to the charts and see how these things pan out. Now, looking at this AUD USD chart on the 4-hour time frame. Now, I want everybody just to look at, to ignore, okay, let's not ignore, okay, let's ignore what is here first. Let me build this. Let's ignore everything in the blue box, okay? Let's ignore everything in the blue box, or let me just take it away totally. Now, can everybody see this? Like, I want everybody to focus on this move to the upside. What move is this? Is this an uptrend or a downtrend? Is this an uptrend or a downtrend? Uptrend. Brilliant. Now, what are the components of an uptrend? We said the components of an uptrend are higher highs and higher lows, right? We said the components of an uptrend are higher highs and higher lows, right? Brilliant. So now I can say this is a higher low. I'll just write HL for short. Then this is a higher high. Am I correct? Am I correct? That this is a higher high and this is a higher low. Am I correct? Brilliant. Now we can say this is a higher high and this is a higher low. Am I correct? I want everybody to follow along so everybody understands it. Brilliant. Then this is a higher high and this is a higher low, right? This is a higher high and this is a higher low, right? Then there was nothing again right here before we had the new, oh, sorry about that. Just enter. Let me just delete that a minute. Delete. Okay. Yeah. So we can now say this is a higher high. This right up above here. This right here. We can say this is a higher high. And this is a higher low, right? This a higher high and this a higher low. Now, do we all agree with me that every single pot spot marked out as higher highs and higher lows are correct on the chart? Brilliant. Now we can see how we can now understand or see that even though these things are drawn out diagrammatically, they can be pointed out too clearly on the chart, right? Now, all I would want everybody to do for me is, you have my WhatsApp number. After this meeting, I want you to go on your chart and mark out higher highs and higher lows for me, and send it to me for review so I can tell you if you are correct or not. Okay, so that's the first part of today's tutorial or the assignment given on today's webinar. Okay, do we all understand? Great. Now that we've understood the concept of higher highs and higher lows, let's go down to the downtrend. So I want everybody to ignore everything I'll be putting in blue, okay? Just ignore everything that is in blue, okay? We've talked about everything that is in blue. So let's talk about this right here. Let's talk about this right here. So is this an uptrend or a downtrend? Is this an uptrend or a downtrend? Am I waiting responses? Brilliant. It's a downtrend. And what did I say components of a downtrend are? Lower highs and lower lows. Brilliant. Now, all I need to do or mark out on this chart is a what? Lower high and lower lows, right? So this is a lower high. You can start from here. This is a lower high, and this is a lower low. This is a lower high, and this is a lower low. Okay, this is a lower high, and this is also a lower low. This is a lower high, and this is a lower low. This is a lower high, and this is a lower low. Okay, let's put it to an end at that point. So do we now see how clear it is, or how easy it is to spot these things on the chart? Do we see how easy it is to spot these things on the chart? Is it difficult to spot on the chart? Responses in the chat box, please. So you see, there's nothing difficult to spot in the financial markets on the chart. Everything you need is on the chart, okay? So before I proceed, okay, let's talk about the ranging markets before I proceed, okay? Let's go and look for a ranging market, and let's see if we have a ranging market. Okay, we have a ranging market right here. Now, everything in blue is what you should focus on, okay? Everything in blue is what you should focus on, okay? Let's do it to this point, okay? Let's do it to this point. Wow. Where is that? Let me know where is that? It's still on the same spot, because if you put your line, you see they are quite equivalent, so you can actually consider them together, okay? You can actually consider them as being one, okay? Because they are on the same level, you can consider them. No, not at all. If I select my time frame, I don't put an end to them based on that time frame, okay? Or I don't put an end to them based on the hour on the time frame. If it says 1 hour time frame, it doesn't mean I need to close my trade in the next 1 hour, okay? It doesn't mean I need to close my trade in the next 1 hour. What I just did using on that time frame is to use the time frame to make a decision when trading, not that I must close my trade in the next 1 hour or something. No, I might decide to take a trade on the daily time frame and refine it on the 1 hour time frame, but my target is still on the daily time frame. So, look, man, is that clear? Brilliant. So let's talk about the ranging market. This is the ranging market right here. This is a ranging market right here. So in a ranging market, I said we have series of highs and lows. Okay. So this is minutes. Okay. Delete. Yeah. So we have low and we have high. Then we have high again. And we have another high, which acted as a fake out. We'll talk about a fake out in a few moments from now. So just play along. Then we have a low here, even though it wasn't very, very accurate. Then we had a low right here again. Then we have another low. And we have a high right here. Now, do you agree with me that this is correct? Yes or no? Do you agree with me that this is correct? Okay, brilliant. Now, quick rule before I continue. Whatever is drawn or expressed to you in diagrammatic format when it comes to the financial markets, it will never be the same when you're looking on the charts, okay? It will never be the same when you're looking at the charts. Pictures or diagrams are picture perfect or are always perfect. But when it comes to the financial market, those patterns will never print picture perfect, okay? So just keep that in mind. So whenever you see these things and they are not the same way you see it in a book, just it's the same thing. It's just that it's not perfect the way it was expressed in a book. Are we clear on that? Now, what do we do in a ranging market? This is the low, this is the high. This is the high. Before we had a new low, then we had a new low, then we had a new low. But the thing is, we can trade in this what? Structure. Like everything is on this chart here, this range, we can place trades and make thousands of naira and thousands of dollars from it. It's very, very simple, and I'll teach you guys that soon, okay? So let's delete everything on the chart and go back to our okay, so now we're done with trend analysis. And before I proceed, does everybody understand trend analysis now? Like what do you see on the trend? When the trend is moving up, what does it consist of? When the trend is moving down, what does it consist of? When the trend is ranging, what does it consist of? We do understand that, right? Now, before we go to support and resistance, if you've got any question, please ask your questions in the question section, okay? Ask your questions in the question section before I proceed. So I just published a poll right now. Are you a client of EGM? Yes or no? Please do respond to it also. And please ask your questions. I'm expecting questions. We'll wait for about 3 to 5 minutes. If there's no question, we'll proceed down to the next thing, which is support and resistance. And also, please respond to the polls. Thank you very much for responding. Please respond to the polls. Okay, I've got a question. What are the other ways of determining a trend? So there are thousands of ways in which you can determine a trend or the direction of a trend. I believe you're asking about the direction of a trend. So I'll take that as you want to understand another way to determine the direction of a trend. You can determine the direction of a trend using indicators, which is majorly the moving average. Okay, and we'll talk about that soon. Just need to follow due process. We'll talk about that soon also, but not in this class. Some other class we'll talk about it. But the other way you can determine the direction of a trend is using indicators. But which is best advisable? Is it using your eyes to determine the direction of a trend or using an indicator? I very much, my own perspective, it's all based on preference, okay? I prefer using my eyes, like my eyes to look at the chart and determine the direction of the trend. That way I don't need to wait for a moving average or add a moving average. It just keeps my chart clean and nice. Okay, so I don't need to wait for a moving average to determine the direction of a trend for me. I just use my eyes. So we've got something in the chart. Yeah, I sent you a playlist, Chooks. I sent you a playlist. Please check your WhatsApp. I sent you a playlist. You can start from the videos in the playlist. That will get you speed up on track to the class, so you don't have nothing to worry about. Okay, so has anybody got any other question before we proceed? Just drop a yes or no if you've not got questions, or if you've got any questions. And if you want us to proceed, just type right on in the chat box. I'm expecting responses. Okay. So let's write on. Now, let's talk about support and resistance. Let's talk about support and resistance. Now, when the name support and resistance comes to your head, or when you just hear the word support and resistance, what do you think support and resistance is? I explained this in the previous class. If you were in the previous class, please do what to like give your opinion on what you think support and resistance is in the chat box. Okay. So what do you think support and resistance is? Just hearing from the word, or just hearing the word for the first time, what do you think support and resistance is? Okay, we've got a few persons typing. Okay, barriers. That's amazing. He said it the way I said it. Absolutely, the way I said it. Okay, the way barriers. There are barriers in the financial markets. Support is a zone that acts as a springboard for price to move up. Brilliant. That's very brilliant. So let's hop on the drawing board and let's see what support and resistance is. But to make it more easy, let's explain using life examples. Okay, I always do that. I explain using life examples. So let's explain using that. Now, when we say support, okay, support. Now, if somebody tells you, I would support you, it means they would assist you. And it is mostly used in positive terms, okay? In positive terms, like they'll help you, they'll raise you up, or something like that, okay? That's what support means to a layman, right? Now, when we talk of support in the financial markets, it means very much the same thing, okay? It means relatively the same thing. But let's use this example. Um, there's a trampoline on the floor, and I jump off a one-story building. I jump into the trampoline. What happens? What happens when I jump into the trampoline? What happens when I jump into the trampoline? I jump off a one-story building and I jump into the trampoline. What happens? I bounce back, right? The trampoline supports me to the upside. It springs me up. Brilliant. So let's type that down. Bounce back. Or spring up. Okay. So another scenario for resistance now. That scenario was for support, not resistance. Well, for support, not resistance. So now let's talk about the resistance aspect. Now, I live in a 5-story building and I'm in my room on the 3rd floor. Remember, it is concrete above me, right? Concrete is above me. Then there's a trampoline in my room and I jumped on the trampoline. I will bounce up, right, to the concrete deck, right, to the concrete deck. What happens when I hit the concrete deck? What happens when I hit the concrete deck? Responses. What happens when I hit the concrete deck? Okay, it pushes me back down. Okay, it pushes me back down. Brilliant. Now that's what I need. So let's type it down. Pushes me back down, fall back. Okay, let's use that. Push down, fall back. Push down or fall back. I met resistance. Exactly. Fall back. Okay, let's do it that way. Fall back. Okay. Now, this is support. This is resistance in simple terms. Like, without explaining support and resistance, did you understand the concept behind it using these two examples before I go into detail explaining it? Do you understand the concept behind it now? Okay, brilliant, brilliant. Now, when we talk of support in the financial market, it's an area in price. Okay, it's an area in price whereby when price comes into it, when price comes into that area, we see price bounce back. We see price bounce back. We see price bounce back. Okay, that's what support is in the financial market. So let me just give you a diagram. There's something on the chart. Let me just draw that. So this is what it looks like. Then we have this, then the market just does this. Okay? Do we all understand this? Do we understand this? Do we understand this diagram? You see, price was moving to the downside, then all of a sudden it hit an area. Then what happened? We had this massive move to the upside. That's support in one single diagram. Okay, we've got a question. Let's see a question. Okay, Adekunle says, how can a client determine or prophesy when trend indicator or graph will absolutely fall or rise using other tools without technical analysis or fundamental tools? Now, there are three types of tools to use in the financial market. Okay, so there are three types of tools to analyze price in the financial market. The first one is fundamental analysis. The second one is technical analysis. The third one is what they call sentimental analysis. Now, what is sentimental analysis? Sentimental analysis is when you hear from somebody that price will buy or price will fall. Do you understand? Like sentimental analysis is this type of thing where, how would I put it? I'm not sure. I don't want to use a few languages, but I heard from somebody that this will happen. That's what sentimental analysis is all about. Now, how do you want to determine when price will fall or rise without having an idea of technical analysis or fundamental analysis or sentimental analysis? It's not possible. Okay, it's not possible. So the only way for you to determine when price will fall or rise is when you know one of these things, either technical analysis or fundamental analysis. Okay, so adequately, that's it on that. Do you understand? How many times, Dennis said, how many times do price hit resistance or support levels before breaking out? Now, it's not the number of times. You can't determine the number of times price will hit a certain level before breaking out. The only thing you can do is to wait for price to break out, to wait for that reaction in price. Okay, so you can't determine it beforehand, but you can determine it by waiting and knowing what will happen. But there's another thing you can do. You can go back in price and see what has happened at that support or resistance level before to know if the support or resistance level will hold or it will break. Dennis, do you understand? Yeah, sentimental analysis is just personal opinion. Yes, personal opinion. Like I heard him say it will buy. I heard him say it will sell. That's what sentimental analysis is all about. So do we all understand? Do we all understand what has been explained so far? A yes or a no? Just drop it in the chat box. Okay, brilliant. Now let's go to resistance. A push down or fall back. So price was moving to the upside, nice and steady. It was going to the upside. Then all of a sudden we hit a significant area in price. And what happened? We just went all the way down. We went all the way down. We went all the way down. That's what resistance is. Like this is what resistance is. And this is what support is. Now, do we understand what support and resistance are? Price will move in one direction, hits a significant area of structure, it bounces up and pushes to the upside. That is support. Price moves to the upside, hits an area of structure, price pushes to the downside. That is resistance. Okay? Do we understand that? If we do, let's drop something in the chat box. If we do, let's drop something in the chat box before we proceed. Now that you've understood the concept of support and resistance, I want to prove to you or let you know that support can turn to resistance and resistance can also turn support. Okay? Now, let's use this example. Price was moving to the downside. It hits this area. Fine. It moves away. Then all of a sudden we had this right here. We break it and we now do this. Did you see what happened here? Price acted as, or this area in price acted as support in this instance. Then all of a sudden it broke and acted as what? Resistance. Do we understand? Do we understand how it happened? Price acted as support here, then it rejected, fine, acted as support. Then all of a sudden it broke, came back for a retest, and acted as resistance. Do we understand? Brilliant. Brilliant. Okay, so for the resistance aspect, let me just flip my chart. Let's go. Okay, so now, do we see this? Price acted as resistance here. Then all of a sudden it broke, came back down, and reacted to the upside. What is that? Price acted as resistance, now turned what? Support. So we have support turn resistance and resistance turn support in the financial market. Do we all understand? I'm taking my time to explain these things so everybody understands carefully. Okay? Brilliant. I've got a question. Yes, you can call it an S and R flip zone. We can call it an S and R flip zone. Okay? S and R, or S or R flip zone. Okay? So price just flips from being resistance to support, and price just flips from being support to resistance. Yes, support is positive because of it to push price to the buying side, to the uptrend, while resistance is negative because it will push price down to the downtrend. You got it, Chooks. You got it quite well. Okay? So do we understand before I proceed? Do we understand? Okay, great. Now, let's go and see this support and resistance pan out on the chart. Okay, let's see how support and resistance pans out on the chart. Okay, so we'll look at support first. Okay, we'll look at support, or we'll look for support first. We'll look for support first before we start looking for resistance. Okay, so now let's look at this area. Let's look at this area. We'll come back to that area. Let's just mark it out. Okay, let's just mark it out. Let's go and look for more. Let's look for more. Wow. Okay, we've seen how many? We've seen 3. Okay, so let's start from here. Now, what did price do here? Did price act as support or act as resistance? Let me know your thoughts. Okay, did price act as support or act as resistance in this area? Did price act as support or resistance in this area? Okay, that's great. Support. Brilliant. Now that we know price acted as support in that area, look at it. The first time it came into it, it pushed away. This would have given me significance that, okay, this is possibly a strong area for me to look out for. I look out for it. I look for buying opportunities there. Then it came for the second time before pushing away. So if I had gotten a buy here, let's see. Let's mark it out. Let's say I got into a buy here. Let's see how much or how many pips that move, and let's calculate how much we could have made off it. So right here to this point, because that's where you want to leave your trade, or that's where you want to opt out of your trade. So we made 188 points. Now, if you were trading on the MT4 platform and you were using 0.01, you would have made $18 from this. If you were using a mini lot, which was 0.10, you would have made $108 from this one. If you were using a standard lot size, you would have made $1,884. Do you see how easy it is, like, to make money from the financial markets when you know all these things? Do you see how easy it is? Let's look at this part again. So let's say price now moved, like we got out of our trade here, then we were looking for selling opportunities. Okay, we're not even talking of resistance now. Let's just still keep resistance to the side. So let's say we took another buy when it came into this area. Precision, you had like a 0 drawdown on this. Then you were targeting this upside, but to no avail, you did not get to that upside. But when you saw this right here, like this candle right here, this long candle, you would have opted out of your trade. So if you were using 0.01, you would have made $4. If you're using a micro lot size 0.10, you'd have made $44. And if you were using a standard lot, you'd have made $446. So you see, still you were in the money, even though you did not catch all the move. Then let's say you got into the trade at this area right here. Again, right here. Let's see how much you could have made off it. You'd have made 200 pips, like 200 points, sweet 200 points. That's $20 for somebody who uses 0.01. That's $200 for somebody who uses 0.10, and that is $2,000 for somebody who uses a standard lot size. How easy it is. It could never be more easy than this. So you see how easy it is to take trades just off support and resistance and make money. Do we all understand? Do we all understand? Yes or no? Brilliant. Okay, so let's look for, where did we mark out the rest? Let's look for, okay, this is another one right there. Price came into this area, acted as support. I won't be taking a trade here. Why? Because this is where the first area of support started from. So I'll be waiting for price to come back into that area before I take a trade. Then look at it. It came back into that area right here. So let's say I took my buy from here. How much would I have made off it? I'd have made 149 pips. That's $14 for who uses a micro lot size. A mini lot size that would be $149. Then a standard lot size would be $1,496. Do you see how easy it gets? Then just one trade that's giving you that much money, you've made 2.11% of your trading account and you're good. My stop loss would be below this previous week, just 20 pips below, to create area for stop hunt or something like that. With 20 pips below this week, 20 pips below this week. But I'm very, very sure if I had gotten into this trade right here, I would have gotten at the week because of precision. I would actually streamline my trade down to like the 1 minute time frame, because I use the 1 minute time frame when I'm analyzing. I'd have gone very low into the 1 minute time frame to look for precision, because right here we could have seen the pattern right there, like an engulfing pattern, which is telling me there's much more liquidity in the market. So I would have done that, and the engulfing pattern, I know it's just a institutional move. When I see the engulfing pattern, all I wait for is price to trade back to the order block or just an RTO or to the mitigation block, anyone which is on time frame. Exactly. 20 pips stop loss with 100 pips reward. That's like 1 to 5 risk to reward ratio. Like you're risking 1 to get 5. That's amazing. Like that, and this is more than 1 to 5. This is like 1 to 8 or so. Yes, this is 1 to 8 right here. 1 to 8, risking 20 pips to catch 163 or 153, 163. Yes, that's like 1 to 8 R. So you see how easy it gets. How easy it gets. It'll never be more easier. Okay, so let's go back into price and look at the last thing we did right here. Okay, so back to this. If we saw this price traded into this area here first, then what happened? It went away. I know this is a support area. I would mark it out nicely. Then when it comes back into this area, I'll take a buy. Now, if I would take a buy, due to my expertise, I would not take a buy immediately. Why? Because I understand this is an order block. Okay, I will explain the concept of order block in another class, but I understand this is an order block. And I'll be waiting for price to trade into the order block. So when it does trade into the order block, my stop loss will just be 10 pips below. 10 pips below the order block. Like below 10 pips, that should be something like this. So taking my trade at, let's say, the half value of the order block, my entry would be somewhere around here. Then my stop loss will be somewhere around here. You see how easy it gets, So let's check how much we could have made off this trade, because this is resistance right here. So I'll be targeting the high. So right here, I would have made a whooping 187 pips, and I will be risking, what is that again? Let's check how much I'll be risking. I'll be risking 18 pips to make 187 pips. That's like 1 to 12 R or something. Yes, that should be around 1 to 12 R, if I'm not mistaken. I'll be using a standard lot. Yes, a standard lot. How do you deal with stop loss hunting and false breakouts? How to deal with stop loss hunting and false breakouts is very simple. You need to study previous price actions to understand how these things occur on the chart. Okay, you need to study previous price. Like studying previous, just take out time to study what price has done in the past. You understand the percentage level of price repeating itself again or doing that same thing. You understand them before price even forms it. Okay, but before price prints out those patterns, you understand them quite well. So that's a 1 to 9 risk to reward ratio. Like 1 to 10. Okay, let's just put it 1 to 10. That's a 1 to 10 risk to reward ratio. Using a standard lot size, I could have made 1.87 9K off this trade. And if you're using a mini lot size, you could have made $187 from it. And if you're using a micro lot size, you could have made $18.7 from it. It depends on your account and your risk appetite, and also how well you've been in the market. So you can't compare my expertise to yours, right? Very, very simple. You can't compare it. So using a standard lot size is not suicide for me. It could be suicide for you due to your account balance or your equity balance, but it's not suicide for me. It's something regular, like something, you see, people want to trade huge lot sizes, but they don't even have the emotional management to trade those lot sizes. Like, you have the expertise, but you're still scared of trading a standard lot size. You're leveling up, but why is your lot size not leveling up? Yes, if you're leveling up, as you said, why will your lot size not level up? That's the thing. So when you're leveling up on the charts, your lot size needs to level up also. I'll create a schedule to be in between a class, okay? To be in between one of these sessions that we'll be having for the next coming month. So just watch out for it and attend all my sessions regularly, because you will miss it out if you don't attend all my sessions, okay? So that is it on this. Then now look, we got 187 pips out of this. Then what's this telling me? This is telling me that I've made 187 pips. Coming back into price or trading back into price, what do I see here? This is a mini support right here that got broken. That's the heads up that price is forming a total soup buy model. So this is a total soup buy model right here. I looked previously into price. Oh, sorry about that. I looked previously into price and I see this is what? An order block right here. So my trade will be at 50% of the order block, which is somewhere around, yeah. So my trade would not have activated. I would have missed out on this trade, but the fact that I know that I'm on the right track, I could have jumped on the trade right here. So jumping on the trade right here, I'm risking like a lot. I'll be risking a lot because my stop loss needs to be below the order block. So I'm risking like 10 pips added to the order block. Okay, 10 pips added to the order block. Then let's see my target. Now my target would initially be from here to here. I'll be going into this trade for 149 pips. Then my stop loss would have been around 57 pips, which is like everything, if you calculate it together, that should be like 1 to 2.7 or 2.9 R. Okay, 1 to 2.7 or 2.9 R. So you see how easy these things get. That's just the trades we took off support alone. Now let's go and look for resistance and see how they pan out on the chart. Okay, let's look for resistance and see how they pan out on the chart. So let's do what to go back in price. Okay, we found one here. Okay, that's one. Okay. This is another one I can see right there. This is another one right here. Okay, so let's go back to this. Now, when price trades into this area for the first time and rejects, and it comes back in for the second time, I'll take a sell. I'll take a sell and I'll be targeting the previous what? Support. Okay, target is always previous support. Don't get greedy. Target is always previous support. So looking at this now, this is previous support. So that's where my target will be. Now I enter this trade, let's say right here. You can't always be precise. Let's say at this next candle right here. the target this right here, that'll be 125 pips with a 10 pips added to my stop loss to the previous structure, which will be from my entry to right up a go through there, like 10 pips. So I'll be risking 20 pips to catch 125 pips. You see how easy it is, like how easy it is to trade off support and resistance. I could have traded off resistance here also because of price traded into two. Let's just say we are dealing with the support scenario. I mean the resistance scenario for now. But if we were dealing with the support scenario, immediately I would have taken a buy also, and I would have made up to like my target will either be my target will initially be the blue box, like the tip of the blue box. So I'd have made another 124 pips. I'll be taking a sell also right here, and sweet, very very sweet sell, because immediately it just went down, like down down down. So I'd have made a whooping 124 pips on this also, with a 10 pip stop loss above this previous high. Like that I'll be risking about still the same 20 pips, but on this I'll be risking, if I take a buy here, I'll be risking around 40 pips. Okay, around 40 pips to catch 124 pips. Then if I took a buy here, I'll be expecting to make 24 pips. But what happened once I see these bearish candles right here, I would have opted out of my trade at this area right here. Yes, that area right there. So I'd have made just 67 pips or 66 pips. So do you see how easy it is, like, to just trade off support and resistance? This is also a range. We talk about a range soon, but let's just put this in mind that this is also a range, and you can trade nicely in the range bound market also. That's just it on like resistance, trading of resistance. Let's go back to the previous ones. So yeah, back to the previous ones that we see here. Price came into this area, resisted, then came back into it. I'll be taking a what? A sell immediately. But before I take a sell, I want to look back into price. What do we have here? We have an order block right there. Right there. So my entry will be at the middle of the order block right here. So that is, oh, sorry about that. So that is this, right? Yeah. So my entry being at that area and a 20 pip stop loss, if I would say. Let's pick out the stop loss first. So let's see. Then with this down here, back to previous area of structure, which is this. I would have made 80 pips, just 80 pips. Then I'll take another sell right here with a 20 pip stop loss, and I would have made about the same 80 pips. But the fact that I knew price was in a downtrend, like if I look back in price and I saw price was in a downtrend, I could ride all this sell to the downside. Like I could ride everything to the downside. I could ride everything and make just 317 pips with a stop loss of 20 pips. All you need to do is to understand where price is currently at. Knowing that price is in a downtrend for me, I know that there's a tendency I can still hold my trades for long. So there might even be a tendency I did not close this sell. I'm still holding it, and it came back up. I took another entry again. Then I just made 317 pips with a stop loss of 20 pips. Like just 317 pips times 2. That's around 640 or so. Times 2, then with a stop loss of just total of 40 pips. That is how easy it gets. Do we all understand? If we do understand, let's drop something in the chat box. Thank you. If you understand, let's drop something in the chat box. See how easy it gets. Like when you just see these things form on your chart, you take the trades. Like it's very, very easy. Now, it's not always rosy as it gets, okay? It's not always rosy. So yeah, I would have taken a sell right here. I would have taken a sell at this area. I'd have taken a sell right here and held to this area. And I would have taken another sell again when it came back into this area. So that means I'll be making 114 pips in two places. That should give us around 130 or 120 plus pips in total with a 20 pip stop loss. You see how easy it gets, like how easy it gets. So there's a tendency that this trade might kick me out because of spread. If we consider spread and the way the market gets volatile, the trade might kick me out and I might just lose 40 pips on this trade. But if I did well to increase my trade plus 10 pips or plus another 20 pips because I'm getting into two trades, that should be 40 pips. So that will actually keep me on the safe side. And I make just a total of 230 pips of this trade. Now, if I had taken a sell right here, I would have lost money because what happened immediately was very simple. Let's take a look at this. I would have taken a sell right here, immediately came into this area, and it would have hit my 20 pip stop loss, like hit my 20 pip stop loss immediately because price didn't turn and start going to the downside. Like this was, if this was 20 pips, this is where my 20 pips would be. This is where my targets would have been, right down below here. So you see, it would have hit my stop loss immediately. Now that was why I was telling who did I tell again? I told somebody that before you trade, you don't just trade off support and resistance alone. You look for confluences to trade off support and resistance. You don't just sell because of its resistance or sell because of that support or buy because of that support. You look for other confluences. That was why I was explaining the concept of order block right here. How I would have used it to enter a trade and all things like that. Okay. The funny thing about the market, or the simple truth about the market, is every single thing you learn, be it Elliott wave, be it institutional method, be it supply and demand, it all still comes down back to the concept of support and resistance. You are expecting price to bounce, so that's what support and resistance tells you. But everybody wants to like make their method or their trading approach look rosy and sweet and fine, and you know, that type of thing. That is why they give it separate names and try to spice it up and refine it. But still, to me, I believe support and resistance is still the major thing in the market. No matter what approach you learn, it still comes down to support and resistance. Okay, so I believe that is all on support and resistance. So about the ranging market, or towards the ranging market, talking about a ranging market, let's use this. Let's use this right here. Let's just read this right here. Now, you see how price was moving high, low, high, low, high. You see how much you could have made off this, like off this, initially off this. See how price, see how much you could have made of this. Like you could have made 124 to the downside, 124 to the upside, 124 to the downside, 124 which failed, and you left with 66 pips, which failed right here. With a level with 68 or 66 pips. You see how easy it is to trade off a ranging market also. Okay, Chooks, where exactly? Where exactly? And also, I need you to go through the link to that playlist I sent you to understand these things properly. Okay, we're expecting Chooks messages, but now you see that trend analysis and support and resistance is majorly everything about technical analysis. But you need to know some other things, which is like the major component of market structure. So now, like I said, we've talked about trend analysis, support and resistance. We relate them to market structure. I'll be teaching you how market changes direction from the upside to the downside when we talk about market structure. Okay, so that's what we're talking about now. Once Chooks drops his question, so I can delete everything on my chart and hide my chart. Okay, now, so while we're waiting for Chooks' question, let's dive right into it. How does price, or how does market structure forms, or what is market structure? Let's just read that way. Market and structure. Markets consist of price. Then there's a structure towards price. That's just market structure. Like the way price forms is price action. Then when you relate price action to the market and itself, there's a structure towards it. Do we understand? Like the structure in which price forms in the market. Do we understand? The structure in which price forms to the market. Do we understand? Market structure is just market and structure. Market is the whole chart. Okay, let me break it down. Now, okay, let me just delete that. Let me show you on the chart first, since everybody's finding it difficult to understand. So this is the market. This is the market, right? Tolu, this is the market. Yes or no? I'd love your response. Yeah, I will send you a recap of the series. Don't worry. I'll send you a recap of this. Don't worry. So, Tolu, like I said, this is the market. Now, look at how price moves. Is there a structure towards the way price moves? Looking at it closely, when we are talking about higher highs and higher lows, lower highs and lower lows, look at it closely now. This is market. This is the market. Is there a structure towards the way the market moves? Brilliant. That is market structure. Do you understand now? This is the 4-hour time frame. This is the 4-hour time frame. The 4-hour time frame. It has it written there. If I change to the 3-hour, it will show the 3-hour. If I change to the 1 hour, it will show. If I change to the 2 hour, but I'm using the 4-hour to explain in this moment. Tolu, do you understand now? If you do, please let me know. If you do, please let me know. If you do understand, please let me know. Okay, brilliant. Now let's go back to market structure. How I wanted to do it. Now in the market, there's always a structure towards which price follows or price prints. Remember we said in an uptrend we have higher highs and higher lows, and in a downtrend we have lower highs and lower lows. Now, how does price change direction pertaining to market structure, combining trend analysis and support and resistance? Let's look at it. Price moves to the downside, correct? For a while, then moves to the downside again. Moves to the downside. This is how price will print. Price will never be picture perfect. So I'm just trying to draw it the way I think price will behave. Then we hit bottom in price. Now, when we hit bottom, we are trying to change direction. When price tries to change direction from an uptrend to a downtrend, it consolidates for a while. Now we've consolidated for a while and we break. Then we come back for a retest and this. Then we move to the upside also again. So I just drew this based on how I believe price might react when we are on the chart. I just drew it based on how I believe price might react. Price cannot be so super plain, or price can't be so picture perfect. Let's put that price can't be so picture perfect. So let's look at this in relation to support and resistance with trend analysis. Now looking at this is a downtrend. Like let's start with what is here right here. Looking at this is a downtrend, right? Yes or no? Is this a downtrend? Yes or no? Brilliant. Now that we are in a downtrend, what are the components of a downtrend? Lower highs and lower lows. Lower highs and lower lows. Okay, so this is a lower low, this is a lower high. This is a lower low, this is a lower high. This is a lower low, this is a lower high. This is a lower low, this is a lower high. This is a lower low, this is a lower high. This is a lower low. This is a lower high. This is a lower low. This is a lower high. Then this is a low. Because we've hit bottom, then this is a lower high. Then we can now say this is a low, this is a high, this is a low, this is a high. Then this is a low also. Do we understand? Like, do we understand? Yes or no? Do we understand? Do we understand how we were able to relate this to trend analysis? Do we understand? Yes or no? Do we understand? I need more responses. Do we understand? Okay. So now what happens next is price ranges for a while, then we change direction. This has been broken. This is resistance before. This is resistance, right? Then we can what? We retest resistance, now turn support, then we are what? Going to the upside. Then this is a what? A higher high, a higher low. 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 I hope you understand now. Do you understand now? Do we understand now? If we do understand, please drop a yes or a no. Okay, brilliant, brilliant, brilliant. Now let's relate this away from trend analysis to support and resistance. So let me click on my screen and let's remove all the black brushes drawn on the chart. Now, if we relate this using support and resistance, you can say this was support, now turned what? Resistance. Sorry about that. This is support, now turned resistance. Support, now turned what? Resistance. Support, turn resistance, turn support. Because support went to the upside. This one turned resistance, broke, turned resistance for quite a while, broke, turned support. So we have what? This turn what? Support. This turn support. And so on and so forth. So do you see how easy it is to combine these concepts together on the chart and use them to know where price is going through? So now you can either call it higher highs or higher lows, lower highs or lower lows. It all depends on preference. So do you understand? Okay. Do we all understand? Yes or no? Do we all understand? Yes or no? I'd love to get responses. Do we all understand? Yes or no? Okay, great, great. So now, with all of this known, you now see how price moves from a what? A downtrend to an uptrend. Very simple. How does price move from a downtrend to an uptrend? All we do is what? It goes in a certain direction for a while, then ranges for a long period of time before breaking out and moving to the other direction. This is how it happens multiple times. Multiple times. And also, please note, when price is ranging, it doesn't mean price would range for forever and start going to the upside. No, sometimes price will range and still push down to the downside. So please take that as a heads up. Okay, so that would be the end of what I want to say. in this session. Everything we'll be talking about in this session. But before we go, let's see this on the chart. Let's see this on the chart. Let's see this on the chart. So real quick, looking at this chart, what do we see? So let's just focus on this aspect here. We see price moved in an uptrend. It wanted to change direction to a downtrend. We ranged and we changed direction to a downtrend. Let's look for another example again. Okay, let's use this. We see price was in a downtrend, moved in a downtrend, ranged for a long period of time. Let me zoom out. Okay, yes, let's use this. So price was in a downtrend. We ranged for a while, then we moved to an uptrend. You see how easy these things are to note on the chart. Price was in an uptrend. We ranged, broke to a downtrend, ranged, moved to an uptrend. See how easy these things are to note on the chart, like how easy they are. Let's go and look for more. Okay, we see this. Price is in a downtrend, ranged, moved to an uptrend. So do we all understand this concept now? Do we all understand this concept now? Yes or no? So please let's do well to drop something in the chat box. Thank you. Okay, brilliant. Now we'll be ending this session right now. And please let's do well to ask questions. Okay, let's do well to ask questions before we go. Let's do well to ask questions. Please ask questions. I'll be dropping a poll right now. So let's do well to drop questions, and also I'll be dropping a poll soon. Okay, so I sent in a poll, which is, would you be applying the things you learned now to your charts when trading? Also, I sent another one, would you be trading after this session? So please let's do well to respond to it, okay? Let's do well to respond to it. And also let's do well to ask questions if we've got any questions at all, okay? Let's do well to ask questions if we've got any. Let's do well to respond to the polls I just sent in, okay? And I'm still on the call waiting for everyone to ask questions. So please do ask questions, okay? Okay, so Sawyer asked, is it better to draw the support and resistance level on a weekly chart rather than it all depends on your preference. Okay, it's all based on your preference. If you want to draw your support and resistance on the daily or on the 4 hour, do well to draw it on those time frames. And if you want to draw it on the weekly, do well to draw it on the weekly. It's all based on preference. You could draw it on the daily and come and streamline it to the simplest or to the barest minimum on the 4 hour, and that's just what it is. Okay. When I put up a trade, I always use a stop loss and a take profit. So I let my stop loss and take profit do all the worrying I want to do. Okay, that's it. So Chooks asks, what time frame do I use to determine the trend on? I just use the daily time frame. Let me show you something on my chart. Okay. On the daily time frame, I don't need to go back into price. I just need 1 year of data, and this is 1 year of data. So 1 year of data is telling me this is what price is doing. I just deal with 1 year of data. That's from last year March to this year March. That's just it. And that's what I do. I just determine the trend using this. Like my eyes, I just determine using the daily time frame, the trend direction. And I only look for opportunities in alignment to the direction. Like this AUD USD, I took the buy. I saw this actually. This right here. I saw that counter trend, which was against the uptrend. So all I did was use the 4 hour time frame to get my entry. I got my entry here. I left right here. So that's just what it is. It's very, very simple to apply. I got my entry at the retest of the trend line. Then I just show it up. And I made about, how much did I make again? Let me check my mobile phone. I didn't make 200 pips. I made about 150 because I took partials. Yes, I took partials when this area broke. So I took half of my trade off, and that was how I made 150 from it, like $150 from it. Yes, I remember quite well. So that would be a wrap on today's webinar. And now next webinar, we'll be talking in detail about more technical analysis concepts and more stuffs to apply to our trading. So thank you guys for attending the session. Thank you very much. It meant a lot. And yes, I would love to see you on the Tuesday, the Thursdays, every single day. I love to see you Tuesday and Thursdays on my webinars. Do have a lovely day ahead of you. Bye.